Hey traders, welcome to Charts and Coffee. Great to see everybody. Hope everyone is, already caffeinated and ready to go because we just got the GDP here this morning. And we are taking a look at what's going on within the reaction to macroeconomically important event. Not as much as tomorrow's PCE. And that simply means that we have two reasons to see significant shifts on the target rate probability expectations. Oh my gosh, Rog, too multisyllabic in the morning. Okay, so basically, here's the thing. There are pieces of data that the Federal Reserve is going to pay particular attention to. Of course, inflation's being one of them. Inflation being one of them. Growth, not as important as it used to be. You might say, Rob, GDP is not important. No, not really. The Federal Reserve does not have a growth mandate. They have an employment and an inflation mandate. And growth obviously would be a major macroeconomic point, but it's not one that's sort of their job, right? They're gonna pay attention to it, but it's not the needle mover that it once was, especially since Jerome Powell has completely redefined what a recession is, because that was the reason to keep an eye on GDP. Are we getting two sequential negative GDP quarters, right? That's not a recession anymore. So really, GDP has taken on a very odd place in the macroeconomic landscape. So that leaves us with things like PCE, which is tomorrow. The reaction to GDP, and I get this question a lot because we know there's environments where good news is bullish or good news is good. And we end up with environments where good news is bad or bearish. And where are we, right? How is the news being reacted to? Anytime we're in a transition, from one monetary policy to another. So right now, what's the transition? We're going from hikes to a pause, which we've been in pause mode for a while. So hike, pause, cut. I mean, that's just round and round we go. And eventually it's going to be cut, pause, hike. I mean, this is the cycle. So the cycle we're in right now is a dovish pivot. Hike, pause, cut is that dovish pivot. Eventually, we're going to see lower rates. By how much? Maybe 3/4 of a point, maybe a point. That's about what target rate probabilities are expecting. We don't know, but we know they're going to head lower. All right. If the data in the transition from holding to cutting is suggesting that by waiting, the Federal Reserve is hurting employment, growth, or not being patient enough with inflation, the market's respond in kind. So why would today's GDP largely send prices higher? I mean, wasn't it kind of disappointing? And that's the point, right? If we have a piece of data that's a little bit disappointing, if we have a piece of data that suggests that things are flat and expectations were at 3.3 for the fourth quarter GDP and we got 3.2, right? Why did that send things higher? Because it just sort of sends a shot across the Federal Reserve's bow that, hey, maybe y'all are waiting too long to cut. Equity markets rally because we're expecting the cuts to come sooner or more aggressively. That's it. And that's the way that game is played and will be played until we get that first cut, which is still very much a June conversation, although PCE tomorrow could change that. It's not going to be March. It may be May. May is just a maybe, but June is a yes. And that's really what equity and treasury and currency players want to see. Are we getting some clarity around June? Because June is not clear as a bell. The fact that we're going to get a 1/4 point cut is not as clear, which would typically be about an 80% expectation. We're not there yet. So that's about what we're expecting, but we're not confident about it. I say we as in, collectively, the investors and traders in the marketplace. All right. So with that being said, that's where we are to kick off the morning. We do have quite a few active swings open in the Sector Secrets Mastery. American Express continues to be our favorite of the financials, which is a fantastic sector to focus on. Disney, it's a quirky corner of communications where Meta and Google basically dominate, but Disney's in that group too. Nice uptrend. We continue to trade that. We entered Chevron yesterday on a DPMR pullback. That's holding its own. And then the tricky one, this is the first foray I've had back into tech since before NVIDIA earnings, and that's Taiwan Semi. And if you're in the Sector Secrets Mastery, both in the notes and in the alerts, I've sent out how we will manage Taiwan Semi at the bell. All right. So do we do anything at the bell? Check out the alerts. You'll see exactly what my game plan is. Not just with Taiwan Semi, not just with TSM, but any stock that on the open is down. So check that out. And those are the four positions. We had a gorgeous day trade in KRE. Now, for those of you that are day trading, please slow down. What I have found is working. Slow down the number of trades you're taking. I am not as active over the past 2-3 weeks as I was maybe the past 2-3 months, where on average it was nothing to get 2 to 4, even 3 to 5 day trades per morning by my morning window cutoff, which is still around about 10:30 Eastern. And it's not that I'm just going to keep pushing for that number. That just organically, naturally was what we got. Now what we're seeing is that, again, very naturally, I'm not imposing this on the market, right? I don't know what's going to happen tomorrow. I just stick with the setups. I try to stick with the alignment, try to stick with relative outperformance, all those things we talk about here in Charts and Coffee, all those things I explained in the free videos over at the Simpler Trading YouTube channel. Stick with the relative outperformance. We had a gorgeous KRE trade. We had 2 trades in total yesterday and a gorgeous KRE. I think we had 2 in total on Monday too. So things are slowing down on the lower end of the number of trades spectrum. But still, we've got some decent trades, just very slowly, much more slowly, growing our account, as opposed to sort of the hockey stick that has been the swing trades. All right, so that being said, what else are we looking for here? I think ultimately, when we are looking at this, there's a couple of things folks have asked me about, and I'm looking at questions. I haven't quite seen any. If you do have a question, feel free to type it in. Let me know what symbol you're looking at. Let me know what time frame you're looking at. Let me know if you're in that position or whether you're looking to get into that position. So one of the things a lot of traders asked me about was, is the Russell waking up? KRE had a really good day. That's really what it was. So if you're wondering what happened with the Russell, is it ready to start keeping pace with the S&P and the Dow and the Nas? Likely not. It just had a good day because regional banks, its number one weighted sector, also had a good day. That was our day trade, right? I'm not going to presume we're up and away from here on the Russell, but keep an eye on KRE, that's regional banks. I had a lot of questions about Apple yesterday because Apple had this crazy move off the daily price movement range. It's not a stock that I'm paying a lot of attention to, but it seems that Apple rallied because they're not going to make an Apple car. So that's that. Probably pretty good news, right? Car manufacturing is a thing. I know they're great at making watches and phones, but I think cars are a little bit more complicated. So anyway, can you imagine a Genius bar at the automotive shop? I don't know. So anyway, Apple's not going to make a car apparently, and it goes higher. Now, who benefited from that? Look, the 2 stocks that are not magnificent, the 2 stocks amongst the 7 that are not, there's a magnificent 5 and there's a maleficent 2. And that's Tesla and Apple. These things have not been tracking with the overall strength in the NASDAQ. So if you're wondering where follow through is, it's not by playing stocks that are not getting the memo, right? We want those stocks. We want those sectors that are moving higher. I think a common term is best of breed, which is fine. I prefer relative outperformance, right? Relative meaning, are these stocks related to each other for a reason, whether that's weighting in a sector or weighting in an index? And then I want the outperformers. That's the key to, hey, if something's going higher, what's doing it in the best, clearest way? What has the best quality trend? And then we go about using our indicators, right, to assess that. And, ultimately, what we want to do looking for strength is find those relative outperformers. And there's 2 newcomers to the to the group. And Mitchell, yeah, if you have questions about the trades we're putting on in the mastery, I'm happy to address them in the mastery. All right. Okay. So in terms of XLE, get this thing on your radar. Exxon and Chevron are two of the stocks that really hold the fate of the XLE in its hand. There's three things I would look at. We'll get to the third in a moment. XOM and CVX need to get above. XOM and I typed that in the wrong place. There we go. XOM and CVX need to get above their respective 200 propulsions. CVX has pierced it, and that sort of opens the door. It's kind of like taking the machete to the jungle. We have a little bit of a path to the upside, bounced off the daily price movement range. So we're taking a somewhat aggressive, but there has to be that first trade, right? There's going to be that first opportunity to getting into a trade, and this is going to be that first opportunity. Unlike Exxon, CVX has managed to get above that area, above the 200 period. And so I'll give this one a shot off the daily price movement range. Frankly, I would have been fine with either. I would have been fine with the XLE as well. We just weren't in that daily price movement range zone. Now, the reason these are moving higher, keep an eye on crude, gang. Keep an eye on crude. Crude's already gotten above the 200. It's plotting consistently green grab candles. It's trying to get more of an uptrend organized above the 200, as I like to call it, in the bullish hemisphere. So there's a lot to like about crude. Yeah, it's having a heck of a morning. We do have crude oil inventories coming out later today at 10:30 Eastern. So ultimately, and what did I do with my clock? Sorry, gang. I usually keep the clock on the screen, but where is it? There we go. Sorry about that. All right. So what we want to do here is know that if crude starts to rally, what's going to go with crude? It's a little too early for OIH. For those of you that are a little bit more Schlumberger or Halliburton fans, it's a little too early for OIH. And I'm not quite thrilled with XOP, although XOP is looking a lot more like XLE. My ideal time to look at oil and gas explorers are when both crude oil and natural gas are moving higher. Natural gas is still a mess. I mean, the issue here is there's still way too much production as opposed to demand. This is just a basic supply and demand conversation. What's supply? Supply is resistance, right? Supply is your ceiling. Demand is your support. Demand is your buying, right? And there's just too much being produced to allow natural gas to go higher. But nonetheless, it does look like XOP is following in the tracks of XLE. So that might be another place to look at. I just prefer XLE right now. And Chevron, Exxon, they got to get with the program. So keep an eye on energy. Another place that we've been talking about recently, not recently, but another place that we want to start adding to interest is what has been a laggard consumer discretionary. The NASDAQ's been rallying, but not a lot of help from its weight in consumer discretionary. XLY, this is primarily three stocks: Amazon, Tesla, which has really contributed nothing in the last year, 14 months to the overall strength. So yes, the broader averages, S&P and NAS, can do just fine, can move up just fine without the likes of Tesla helping out. So there's that. Home Depot becomes the third most interesting stock and the third weighted in this XLY because ITB and XHB are moving higher. Lowe's and Home Depot are two of the heavily weighted stocks. These are places that are going to benefit when rates drop. And you can see ITB. We've been talking about ITB in Top Tier Outlook. ITB is already making a move. We haven't even seen the first rate cut. And yet, what do traders do? They start to look out ahead, right? They start to say, well, what's coming and how do I position myself for it? All right, question here from Michelle who asks about Lilly. So, Michelle, I don't look at things 1 to 3 weeks from now. Is there a setup, and then which time frame is it on? And then I can determine what the potential time horizon is. We don't pluck the time horizon necessarily as part of the setup unless we're looking at, for example, earnings as a catalyst to wanting to get out or as a catalyst for the rally. So Lilly is a great uptrend. I like it a lot, Michelle. We need a pullback. I would focus on the Darvis level. And so again, it's not about 1 to 3 weeks. I don't know where it's going to be in 1 to 3. Nobody knows where it's going to be in 1 to 3 weeks, but we can make some educated guesses about the fact that an uptrend is likely to punch up to higher highs and higher lows. But that's not going to happen until we get above 795 or 8. So really the trade right now is stuck within those two automatically drawn yellow lines. One is support and the other is resistance. And so that's the limits of what I can, for now, expect. So I'd want to get long closer to the yellow line. I'd have to take profits closer to the upper yellow line. And if we break 795, 800, we can definitely continue to move higher. All right. So ultimately, when I look at something like Lilly, right, as opposed to say Apple or Tesla, the thing we've got to remember is things that are in uptrends are definitely where we want to be. So Michelle, I love the Lilly thing. Yeah, absolutely. All right, next up, Jason says, can I please say the S? It's so funny. I know you're just teasing me, Jason. It's really funny. And I get every now and then people do say that. Has no one ever listened to how that's actually pronounced and how Elon Musk actually says it? He does not. It's actually a ZS. It's actually a ZS. Listen to the way Elon says it. That's all I'm doing. It's his company. I do get a lot of people going, why isn't it Tesla? I'm not a snake hissing. That's why. All right, Jason. Good comedy first thing in the morning. Cheers. All right. Next up is taking a look at what's going on with yields. And we have that GDP. So how are yields actually behaving? The bond market is still below the 200. Those white dots that I have there, the bond market is still below the 200. So bonds are still saying, we don't see the path yet to where the first cut is coming. And maybe, Powell, you're taking too long to do it. Bonds always like to play a game of chicken with the Federal Reserve. So immediately, yes, I'm going to totally date myself. I'm imagining Kevin Bacon with his shoelaces around the pedal of the tractor in Footloose. That's what the bonds do, right? The bonds are Kevin Bacon. So what we have here is ultimately still heavy yields. We need to get back above that 200. But notice we're not punching down to lower lows with quite the consistency we were. Bonds are leveling out, but they're still kind of bearish. They're still definitely uncertain. All right. So next up is, let's see, what do we have here? What was the expectation for Disney? What was the expectation for Disney? Well, I bought it. So JP, higher highs. That's my expectation for Disney. That's my expectation for Disney. All right. What else? Oh, speaking of Disney, let's crack open here before we call it a show. XLC. Why do I like Disney? Why do I like Disney? All right. So let me move the clock so everyone can see. Meta is in an uptrend. So for those of you wondering, Rog, where is there some strength within the communication sector? All right. Disney would not necessarily make the cut now. We got a good fill. We got a daily price movement range, support level entry. But what looks good now? Meta and Netflix, right? Meta and Netflix. Those are your best. We talked about relative outperformers. That's your relative outperformer with an XLC. And is XLC a relative outperformer? It is. Another one of our favorite relative outperformers. My gosh, have financials been unbelievably good to us in the mastery throughout 2024. If there's anything that we have done consistently, I think we've been in and out of Bank of America to the long side, Visa to the long side, JP Morgan, I think twice to the long side, and American Express. Is it 4 times now? That's just in 2024 in the last 6 weeks. XLF is in fuego, and that's why the S&P is doing what it's doing. So, I think if we keep punching higher highs in XLF, eventually we'll get a little bit more broad generic interest in financials because, that's what trends do. As they continue to move higher, they garner more and more attention. So that's going to be good for more interest to the long side. But we got to be cautious because there are a few things that are obviously like PCE tomorrow that could create the pullbacks, but that's okay. I say cautious, really, I should have said patient. We want to be patient because the next set of pullbacks we get, American Express, Wells Fargo, Visa, JP Morgan, even Berkshire, right? For those of you who like to trade Berkshire options, definitely want to stick with buy the dip where we have the trends. As always, oh, I love the pronunciation. Yes, tomato, never pronounce the T in often. And yes, I get correct on these things. They're Adidas and they're Nikes. Yes. It is Nike and it is Adidas. All right. All right, gang. Have a good, although, my mom still says aluminium and film. So there you go. All right. Have a great one, gang. I'll see you tomorrow. Same time, same station. Be good to each other.